Hello, my name is Tim Enneking. I'm the Managing Director of Digital Capital Management. Today we're going to talk about the early history of parallel currencies. And you might ask yourself why the heck we're going to talk about that, and it's really quite simple. Cryptocurrencies, and we'll accept the term currency for now because, as we'll discuss later, it doesn't really fit the traditional definition of currency, even BTC, but conceptually let's use that framework. Currencies, parallel currencies, alongside what we now call fiat currencies, have existed for literally thousands of years. And cryptocurrencies didn't spring from whole cloth from somebody's mind, whether Satoshi Nakamoto was a man, a woman, or a group of people. There, as the phrase goes, geniuses stand on the shoulders of giants. So what we're going to do is talk about some of those prior giants, not by name, but by conceptually. So let's go back. Go back to Roman armies in Gaul, for instance. A Roman army would go through, find a farmer, have to feed its soldiers, would take out the cattle. Their armies didn't bring enough money to be able to pay for such things, so they would issue scrip. And some of that scrip is extant. It's on bark, it's on leather, where a Roman general or consul wrote out to a farmer, basically an IOU, let's say 10 thalers, which is the Roman currency, the etymology of the word dollar. And so here's the farmer who has no more cows, but he's got this piece of scrip, right? And speculation on my part, probably somebody was running around behind the army buying up the scrip for 20, 30 cents on the thaler, heading off to Rome and getting 100% on the thaler, less what he had to pay to some senator or something to be able to execute the deal, but doing arbitrage. And the poor farmer knows he's not going to get full face value and he doesn't want to go to Rome anyway, so he sells it at a discount. That sort of concept exists when there is a shortage of money and when money can't be easily moved around. Flash forward a little bit to after the fall of the Roman Empire, so we're in roughly 500 AD, and let's move up to the very, very beginnings of the Industrial Revolution in the late 1700s. So you've got over 1,000 years there, which sometimes referred to as the Middle Ages and sometimes referred to as the Dark Ages. And one of the reasons we refer to it as the Dark Ages is because nothing really happened, at least in Western Europe. Why did nothing happen? If you look at it from an economic standpoint, from a macroeconomic standpoint, nothing happened because of M1. M1 is the money supply. The Industrial Revolution would not have been possible without things like the British East India Company, the Dutch East India Company, which were some of the first, or they are clearly the forebears of modern corporations. They were stock companies. So you bought a share of stock, and you paid for it in money, but that stock could actually be bought and sold and used to buy other things. So the money supply expanded. Why? Because money wasn't purely represented by coins. So let's go back up to 500 AD. How did you expand the money supply between then and the issuance of stock? The answer was you found more gold and silver mines. Those, at that point in time, we left salt and seashells behind and basically stabilized on gold and silver, and to some extent copper and bronze and other alloys. But for valuable currency, for valuable money, it was gold and silver. So you could either debase the currency, in other words, melt it down, add some tin or something that was much less expensive, restamp it, reissue it, but people figured that out very quickly, and you had the first instances of inflation. Or you found more mines and printed more. Then you had the concept of seigniorage, which is the difference between the cost of mining the gold or the silver and the value of the coins that are issued. That increase in money supply, hard money, is what we refer to it nowadays, that increased M1. But the money supply was clearly inadequate for economic growth. So you had two effects. First of all, you didn't have a lot of economic growth. And secondly, you had a tremendous increase in barter. There wasn't money, so I'll give you a pair of shoes if you shoe my horse, sort of thing. Which would have been terribly unfair, by the way, because it took a lot more energy to create, a lot more time and trouble to create shoes than to shoe a horse. But the concept existed, barter developed because there wasn't literally enough money. Now, with the Industrial Revolution, with the start of the Age of Exploration, with stock companies, you suddenly had an increase in M1 because you had something else that was easily portable and could increase that represented money, in this case shares of stock. And so ignoring counterfeiting and all the other things that always happen, it's very important to realize that a shortage of actual money is what brought about the Dark Ages. And in the Dark Ages, it's not like the sun didn't shine or something, but the Dark Ages were an interesting period because comparatively little happened compared to what happened before and what happened afterwards. The modern incarnation of what we saw with Roman armies 2,500 years ago, we actually saw as recently as World War II in the exact same concept, where armies would invade, they would take supplies, and they issued scrip. And so those armies did exactly what the Roman army did. Taking supplies, they would reimburse with scrip, which could be exchanged at some point in time for what we now call fiat currencies, US dollar or some other currency of the victor, presumably. And if you took scrip from a losing army, then you never saw anything at all. These currencies were what we saw from Roman armies through scrip from modern armies. They're parallel currencies, and they rose up because there wasn't enough currency to be able to complete a transaction. And the other solution to not having enough currency is barter. So we've seen these trends literally for thousands of years up until very, very recent times. And so there's the end of the early history of parallel currencies. We'll talk more about modern history and the transition of cryptocurrencies in the next installment.